The first thing we need to talk about today is something that I could be spectacularly wrong about. We will certainly get into that because I want you to understand my opinion and how wrong I might be. We need to talk about Morgan Stanley's call on the housing market. We can, of course, talk about FedEx earnings. We can talk about Bitcoin. There's all kinds of stuff going on in the financial world. This is your daily financial news for Wednesday, June 21st. And the first thing I want to do is I want to jump right into Jerome Powell's speech. He's actually talking right now, I believe, in front of Congress. His prepared remarks came out early, and here they are. Basically, Jerome Powell is saying we are going to hike higher. He sees a reason to raise hikes a couple more times this year to beat back inflation. The labor market is still tight. There is still work to do. So why might I be wrong? Well, let's go back in time. And I want to acknowledge, and hopefully you will agree with me, I have supported Jerome Powell the whole way to 5%. 5% was the number I called a long time ago. I wish he got there faster. But lo and behold, you and I together, we have been calling the rate hikes pretty well. I now believe, pretty confidently, unfortunately, that he's done. I believe the political theater that he has going on right now is just that. If you really dig into Jerome Powell's speech, he basically is saying there's more work to do, right? The labor market is still tight. Inflation is still high. But as I've brought to you over the last several weeks, we've had several discussions about inflation is about to roll over. We have the largest base effect coming next month. We have used car prices, we have housing, we have a lot of net good data coming. Also, we talk every Thursday, the job market is finally starting to loosen up. So again, the best analogy I could have, and let's be clear, I am not a baker, but this is the best analogy I have for you. Jerome Powell has put a recipe, and it's Jerome and the Fed and all of them, but I'm just going to say Jerome Powell. He has put together the ingredients to bake a cake. That cake, i.e. interest rate, is now in the oven. It is my belief that Jerome Powell is smart enough to wait for the cake to come out, right? I don't know what cakes take. Maybe they take 30 minutes. I have no idea. But basically, the Fed has done enough, and they just need to wait for the economy to slow down. They need to wait for inflation to roll over. We have talked for months that the data post-July, August, and September get better for housing. I think Jerome Powell knows this. I also think Jerome Powell knows that if he signals pause, he is going to be seen as weak, and the market is going to take off. So again, I believe Jerome Powell is talking tough and knows he is not going to raise. That said, it is certainly possible I am wrong. Absolutely. Wrong all the time. But here's my analogy about the cake in the oven. My belief is if they raise one or two more times, that would be equivalent to a baker, in this case me or Jerome Powell, walking over to the stove or the oven and raising the temperature. If anyone knows about baking, if you simply raise the temperature, does it really cook faster? Does it come out better? I don't think so. I think it gets burned. I think it gets destroyed. So my belief is if Jerome Powell is not patient and he raises the temperature on the economy with higher interest rates, he is going to have to back off or cut sooner. My belief is, again, Jerome Powell is smart enough to realize he just needs to leave the oven alone, and raising interest rates 500 basis points is plenty. Just back off, bucko, and let's see where this goes. I also know that I could be wrong. So again, this is an important call, because if Jerome Powell and the Powells at the Fed raise one or two more times, there is no question that the economy will break. I think they've gotten it to a reasonable point where if they just sit back and monitor, they will be happy with the results. That is my opinion. I am not changing my thoughts, but I will acknowledge that there's a lot of folks out there that frankly are like, hey, Jerome Powell told us going higher. Why would he change his tune now? I believe what I believe. And again, I supported the move up 500 basis points. I'm done. The economy can't handle more. We shall see what happens. So again, that's an important point. Again, I can't stress this enough. I am making a risky ploy. It would be far easier for me just to say Jerome Powell's going higher, buckle up. I just don't see it. I just don't see it. So that's an important thing going on today. What else should we talk about? Well, let's talk about Morgan Stanley. Morgan Stanley has updated their housing call. If you don't recall, Morgan Stanley was one of the housing bears. Morgan Stanley earlier this year thought that housing prices would fall 4% this year. A 4% move in housing, this is median home prices, is actually a pretty big move for a single year. So Morgan Stanley was on the bearish side. They just came out yesterday and have said that basically home prices December to December will be flat. So as I expected at the end or the beginning of the year, I thought a lot of these housing bears would pivot, would come back, and we are starting to see more and more bears say, you know what, maybe it's not bad out there. But again, it is bad if you're in the real estate industry, you're down 40%, and I don't see it getting better. The move up buyers out, all the things that we talk about. I want to give a special shout out to Beth Traverso. If you don't know who Beth Traverso is, you should check out her playlist on this channel. She's a top 1% agent. She gives her time to this channel every week. She did something extra special yesterday. She did an hour conversation with One Rental at a Time students. She answered their questions such as what to do as a brand new agent getting started, what to do in this housing market, lots of great information. And just so you know, she gave her blessing to share that with you, the YouTube world. So if you want to see an hour of in-depth Q&A, it will be coming out at 9 a.m. this morning Pacific, or in just about 2 hours. I hope you enjoy it. Do me a favor, leave a comment below thanking Beth, because she certainly doesn't have to do this, but she cares about the community and she was an excellent contributor. And thank you to all the students who joined and asked questions, because again, one thing we do here is we don't do PowerPoint, we do live Q&A. So all the students that showed up, thank you, thank you, thank you. And here's a question for you. What expert do you want to interact with next week? I want to give you access to an expert every week. So leave a comment below on who you would like to interact with, and I will try and set it up. Let's get on to student loans. Looks like student loans are going to be restarting officially in October. I will admit that I was a little shocked by the student loan balances. Student loan balances are $1.635 trillion. That is a lot of interest to be paid coming up. That is going to, again, Jerome Powell, as you are listening, that's going to impact discretionary spending. That is going to impact inflation. It is going to pull it back. All signs, Jerome Powell, is the economy is slowing down. Don't you dare go to that oven and turn up the temperature. Just go sit down, play on your phone, and wait for the cake to be done. You're almost there. Read an interesting article from the Institute for Public Policy Research. Yes, I am that much of a nerd. Again, the Institute of Public Policy Research, just so you know, that is a UK organization. They were talking about the UK economy. The quote that I took from it is, the UK economy is unfortunately in a doom loop. If you don't know what's going on in the UK, it is pretty bad. They have high inflation, last reading over 9%, and low growth. Folks, this is the dreaded stagflation. Stagflation is no bueno. It is no good. And unfortunately, the UK is suffering through that, which really means they probably have to raise rates again this week, which will further dent growth. It is really a combination of dual mandates, and it is not going any good. Looks like Mike Wilson, Chief U.S. Strategist for Morgan Stanley, who is a bear, who is a stock bear. Let's just call it what it is. He is basically highlighting that the FOMO of stock trading is almost over. The fear of missing out is almost over. The chase for the top 7 tech stocks is almost over. How about Bitcoin? Again, If you've been an OG of one rental at a time, you know that in 2019, I think it was 19, it might have been 18, but I think it was 19. I went ahead and moved 1% of my portfolio into crypto, Bitcoin and Ethereum. Not adding to it. It has always been an insurance policy for me. Again, it's not something I trade with. It's my, if I lose it, who cares? But yes, 1% portfolio is still there. Haven't bought, haven't sold, won't do either of those. But it looks like Bitcoin is catching a bid because we have the big institutions like BlackRock and Fidelity coming out talking about an ETF and things of that nature, giving that validity. We are seeing the scams of altcoins go bust. We are seeing scams of dirty deeds go bust. But maybe at the end of this, the strong get stronger, and will be interesting to watch. So again, I do think it's very interesting to watch Bitcoin, Ethereum. Again, I have a 1% portfolio. I haven't bought more. I haven't sold anything, and we are going from there. Looks like Sonny, if you guys have been on the channel, wants to come say hi. Hi, buddy. How are you? You want to come say hi to everybody? This is Sonny. He is climbing on my lap. So let's just keep it going. How about Tom Lee? So if Mike Wilson is a bear, let's give a shout out to the Bulls. Tom Lee has come out and said that given that inflation is rolling over, he quoted Manheim Used Cars. Manheim Used Cars is down 3.2% for the month, 9.4% for the year. He talks about CPI going down, down, down. And his call for the S&P 500 for the year is 4750. So the melt up, or whatever you want to call it, is still going strong for Tom Lee. How about Pantheon Economics? Chief economist Ian Shepherdson talks about housing transactions going to a new low, which is interesting. I think the low for the current period was 4.02 million, or 4,020,000 transactions. That, of course, is an annualized number. I believe that was the month of December. It might have been January, but I think it was the month of December. Basically, Pantheon Economics is saying we are going to see transactions fall to a new low, which to me means something with a 3 on it. Basically talking about interest rates. Interest rates are, again, something very important to follow. Remember, we talked about right at the open, Jerome Powell saying, hey, we're going to go higher, blah, blah, blah. That will hold mortgage rates up. That'll catch a bid in the 10-year. So I think the longer that mortgage rates stay hovering near 7, right? 7 is when demand stops. 6, demand comes back crazy. So again, maybe Jerome Powell, talking about turning up the oven or the heat on the economy, keeps transactions low, and Pantheon Economics will be proven right. I don't know. I think 4 million transactions is a pretty good number, so I am not going to call something lower than that. But again, I am wrong all the time. If we are going to get a number of 3.9, 3.8 million transactions, we really need rates at 7%. And I think as of right now, rates are like 6.8. So we shall see what happens. Redfin came out with a brand new call for mortgage rates. Redfin is saying that the 30-year mortgage rate by the end of the year will be 6%. That is something that I have been calling for quite a while as well. Let's talk about a couple other things going on. We've got AT&T shutting down their flagship store in San Francisco. Yes, the death of San Francisco is still continuing, or dying of San Francisco is still continuing. I firmly believe that San Francisco will be back. No question, no question, no question. The only question I have is how far down it will go. And really for me, it is what it is, but San Francisco cannot find bottom until they change the leadership. The politicians have put this together, and they are getting what they got because they did what they did. It is that simple. And unfortunately, you're going to see more pain. You could see bank failures because of San Francisco leadership. How could that be? Well, San Francisco leadership decides to do this and that, to drive companies out, that lets homeless and drug users camp on the street. Businesses leave, offices go bust, and if there's a bank that had a lot of San Francisco office, they will go bust as well. These all things connect together. On top of that, we have some earnings to talk about. We talked about FedEx yesterday being one to watch. Well, we got it. Earnings beat. As an ex-accountant who would sit around at the quarter end and make adjustments, beating earnings is not, in today's environment, not the thing to do. It's revenue. And revenue came in light, and they gave weak guidance, basically flat. So again, FedEx, think shipping boxes and cardboard around the world, missed. Not a great sign for consumers, although we do have revenge travel going on. How about Winnebago? Think about all the RV buyers 2 years ago. We talked about it on this channel that was not going to end well. I have known many people to buy RVs over the year, use them once and never again. We are starting to see RV used prices come down. Winnebago's revenue, folks, this is not good. Down 38.2% year on year. So again, the folks that were the pandemic winners probably won't be winners, or actually aren't winners anymore. There's a lot of pain coming. And then finally, I got some data on mortgage applications, and I found a new piece of data. But let me just stop right here, right now. I want to thank all 154 of you for watching live. I appreciate you. Thank you, thank you, thank you. But we only have 24 thumbs up at the moment. So if you can help, give me a thumbs up. If you're watching this on replay, let's see if we can't get to 200 or 300 thumbs up. Leave some comments below. Interact with me so more and more people can come to the daily financial news. So thank you all for being awesome and rock stars. Back to what I found. You and I have talked about weekly mortgage applications every Wednesday for quite a while. Just so you know, mortgage apps to purchase were up 2%. Week on week, 2% week on week. They are down 32% year on year. So think about that. Mortgage apps are down 32%. But here is my brand new piece of information. I had not heard this, not seen it. If it's out there, I missed it. Mortgage applications to buy new construction up 17% year on year. I'll say the stats again because it bears repeating. Mortgage applications to purchase homes down 32%. However, mortgage applications to buy new homes up 17%. And for folks of you that are thinking about or wondering what's going on with us in Vegas, I want to highlight a video that's already been recorded. It goes live at 11 a.m. this morning. 11 a.m. this morning, there was an interview that Omar and I did. It will answer all of your Vegas questions. So instead of kind of giving the answer, I will ask you to tune in at 11 o'clock and to see what Olivia and I might be doing in Vegas. And yeah, been a lot of fun, folks. Remember, you have the opportunity to become a better technical analysis or trader. You're going to get the opportunity to interact with Dan Bird on July 16th. It's going to be 3 hours. You can bring your stocks to the event. He will look at the charts and give you his thoughts. More importantly, he's going to help you understand the risk calculator, the position sizing. As of this morning, there are only 13. That's 13 of you that have signed up. I got a room for 200 of you. I would have thought that more of you would have signed up. We talked about having you interact with Dan Bird about a month ago. You said yes. It took some coaching, prodding, and some planning, but it is now done. So again, I'll put the link below. I certainly would have thought more of you would have signed up. I do realize it is a month away, but do me a favor, if you're going to be there, sign up so I know that it was worth the extra effort. And of course, if you buy the event and you can't make it or you can't attend the full session, just like everything else I do, I will give you the recording. This Dan Bird session promises to be full of information. You will probably have to watch it a couple of times. I have worked with Dan for 20 plus years. He is so full of information that sometimes I have to go back and watch things again. So again, come to the event, interact, ask questions. It will be amazing. Like, subscribe, comment. Don't forget to watch Beth's interview at 9. She gives. And if you want to know what our thoughts are on Vegas real estate, you can tune in at 11. Take care, everyone. Have an amazing day. Bye-bye.